How's it going out there? It's Thursday, May 5th. My friend Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. It was Thursday. I like to bring in people and interviews and things like that. And the interview today is going to be with Daniel Creech. And we really said it, right, Dan? We said, well, Thursdays would be interviews, but I'm trying to get more timely interviews, better interviews, and not just anyone on the podcast. So I'm very selective now, but we're getting positive feedback of our back and forths, which we do every Wednesday. So we're doing that. Yeah, they like you for some reason, Daniel. I don't know why.
Well, I appreciate that. Continue to send all your feedback, good and bad. I love this. So yeah, when you asked me to join in on Thursday, well, that's great. So now instead of a happy Wednesday, we got a great Thursday.
I know.
Happy pre-Friday, since we were being funny yesterday with the 4th, Cinco de Mayo, happy Cinco de Mayo, and then Friday. Man, what life is good, Frank.
Life is good.
Markets are rallying. Everything's fixed.
Yeah.
Green. Well, not today, maybe, but
you wouldn't think about watching the news. Holy cow, I can't even watch the news anymore. We'll get to a little bit of Roe versus Wade, and not in the political part, but just it's I feel bad for Ukraine. I feel bad for Ukraine, right? Because remember, that was such a big deal, and now it's like there's not even a war going on because of this. It's the midterm election, so it's going to get really, really crazy. We'll talk about that because it's important. Because what's going to come down the pipeline, right? You're going to see a lot of bullshit, a lot of craziness, a lot of whatever, on both sides, right? Just extremes and stuff because it's very big, it's midterm elections. But we're talking about your portfolio, how it can impact you. And one of the things, obviously, right, we saw the Fed come out and do what it said it was going to do exactly. And the markets didn't really do anything at first until you had Powell say, someone asked about a 75 basis point hike, and he said, you know what, that's off the table. It's something the committee is not considering. And you saw stocks take off. Yeah. Towards the end of the day. I mean, literally take off. Like, you got to blink your eye and you're like, holy shit, the Dow's just surging. Everything started surging and everything is up. I mean, let's start there. What do you think about it?
Well, it's hilarious because I was sitting at my desk and Frank was walking through the common area here in the office and he just kind of shouted nonchalant, hey, what's the markets doing? I said, everything's rallying. Dow's up damn near 1,000 points. He said, what? Because as we were joking, I mean, it changes so much and then boom, it take off. First off, I was surprised on the front page of Wall Street Journal today, Frank. Fed rate rise is biggest since 2000.
Yeah.
If we mentioned that yesterday, I totally ignored that. I didn't think, I thought I saw somebody reference it to like a historic Fed meeting or something. I get it. There's a big paradigm shift going on from where we've been and where we're going. We'll talk about that in a minute. But put that in perspective, a 50 basis point hike was the largest since 2000.
2000.
That's crazy. That's just at a later time, people, take time to think about that because it's worth it. The point to the 75 basis point thing, to your point, I got to give you some credit. It was markets hate uncertainty. So now you can at least plan, hey, all right, so next month, another 50 basis point is going to be priced in. The following meeting, at least another 50 basis points. And now he has 2 more opportunities when he does these next 2 meetings. Next month I don't know when the one is after next month, but he has 2 more opportunities and all the time beforehand because remember, these people are just like celebrities out of Hollywood, minus the slapping in public so far, because they like to be in front of the cameras and talk. Andrew Horowitz and you had a good conversation about this a week or so ago. Mm-hmm. If they would just be quiet in between meetings more, other than what they've already said, that would be good for investors and markets. Let it figure it out. Let prices slosh around. However, to your point, now they can bake that in. They can think, okay, we know nothing uncommon is coming or uncharacteristic. Jerome Powell is trying to communicate and steer this economy. Hey, I wish him the best. We can make money either way. We need to be nimble, but I think it's to your point. They hate uncertainty, and now you got a little bit more certainty to carry you through the next several months, which is why I think everything rallied.
Yeah, and bring up a good point there, right? Because certainty is important, and I think that 75 basis point, being off the table, obviously, right? So you want certainty in the market. I really, talked about that issue in all week, right? And why that's so important. With that said, we know where the Fed has to go, right? And when they're saying that's off the table, I mean, you know where you have to be. You really do. You know where we all know, right? You got to get it up to 3%. And you could do it now, or it could take, 12 months. But what they're doing right now is playing that hope strategy, right? Okay, let's see what happens, and hopefully it's not too bad, and we'll see, and inflation moderates, and I get that. But when I look at the bigger picture, I'm a person that's, hey, you know what? We all know where it has to go. Raise aggressively, because I also said that you should be raising aggressively. We knew who they were. There's a 100% chance they were going to do exactly what they did, right? So, but when I take a step back, okay, what's important is you should be raising aggressively right now, because you could always take it back. Not that that's a great thing when you take it back and there are market implications and stuff like that, but you can take it back, because I hate when people look at a scenario and it's like, look, for every decision you make, there's consequences. Even if you make, hey, this is the right decision, but still there's going to be consequences on the other side. So there's nothing perfect where if you do this, everything's going to be great. But I can tell you, if you look back, and I went back in the past and you know, how did the Fed handle situations like this? So you're looking at the tech bubble. So it blew up in March 2000. That month, the Fed raised rates by 25 basis points, right? That month. And then in May, when the market was absolutely crashing, we were in the heat of this, Daniel, they raised again by 50 basis points, right? But they were wrong. They were dead wrong. So that's okay.
Because, of course, May of 2000.
In March of 2000.
Okay, gotcha.
So this is the tech bubble, gotcha. Right? So of course, you know, you see in 2001, they're like, holy shit, this is really, really bad. And they cut rates dramatically from 6.5% they were back then to 1.75%. And by 2002, we came down to 1.25%. And in 2002, that's when we kind of bottomed and we took off. In 2006, pre-credit crisis, and I should say pre-credit crisis, it wasn't really pre-credit crisis because the writing was on the wall, right? We saw several hedge funds blow up, Bear Stearns blow up. We saw mortgage companies file for bankruptcy. We knew in 2006, holy shit, man, something's going on right now. We didn't know to the extent, obviously, that, we're leveraging subprime loans, through the fucking roof where...
Didn't know how bad it was.
We didn't know how bad it was with AIG and stuff like that in 2008. But we saw the writing on the wall. Well, holy shit, like it's not often where hedge funds go bankrupt and big companies, mortgage companies go bankrupt, right? So we saw it. This is 2006. So the foundation was cracking, and the Fed increased rates from 4.5% to 5.25% in 2006. Right? So what happened? Holy shit, we were wrong, right? So rates were pretty high until September 2007. They were still high. Through September 2007, started aggressively cutting through 2008, which we all know what happened. They brought them down significantly to effectively, zero. And in 2017, we started raising rates again. I thought it was a smart move because we're seeing very strong growth, low unemployment, and zero is not normal, right? So we had to get up there, but we finished the year 1.5% after several rate hikes. And in 2018, the Fed just said, you know what? Hey, we got to take this back, the rate and cut rates. And in 2018, the reason why wasn't from some dramatic event or craziness. It was a fearing of a global slowdown due to trade wars, right? So which was ridiculous. So we look at 2018, the Fed tightening, and then also in 2019 they started cutting it. I didn't think in 2019 they should have cut. They didn't really need to cut, right? Yeah. When we were at I think we got up to 2.5%, right? So we got up to 2.5% by 2019. All of a sudden they started cutting again, fearing the global slowdown. All the shit, there was a lot of talk. We still had strong. It was still okay, but anyway, we brought them all the way back down. My point is this. If you aggressively raise rates and you're wrong, you can always take it back. And like I said, it's not like, you take it back, but it's something, that's what you have. That's what you could control. The Fed could control that. When a reverse happens, when you're not raising rates during booming economic times, when all asset prices surge to record highs, which we saw last year, and trillions inject to the market, then you have today's environment where stocks are crashing, inflation's surging, and the Fed's forced to raise rates, which backs them into the corner. So, under that first scenario, the Fed controls the outcome. So if they're raising rates aggressively and they're wrong, they control the outcome, Daniel, right? So they control it. In today's scenario, the Fed has no control. They don't control the environment. The market is controlling the Fed. That's a major, major difference what's going on. The Fed is acting like this because of the market, where the Fed could be like, okay, here's what we could do. Now it's like you're so behind the curve. So for me, when I see a rally like this, because you say you're not going to aggressively raise rates, I wish you aggressively raise them, because what's going to happen, I think, over the next 2 weeks is you're going to see a sell-off. You're going to see the markets pull back because they're going to realize all this uncertainty. Holy shit, we got to raise rates. The war's still going on. Oil prices, inflation's still happening. Ag prices, all this shit. And yet, if they aggressively raise, I think you would have saw the opposite happen. You would have saw the market crash and the Dow go down like 1,000 points. And then I think over the next couple of weeks, you would have saw it gradually go up because we're getting closer to that point.
Right.
Right. And the Fed is having more control now. And that's what it's crazy to sound where the Fed has control. I'm just saying the Fed can control the outcome, which they're used to. Right now, the Fed can't do anything. It's handcuffed, right? They're handcuffed. They're like, holy shit. That's why they're not aggressive, because they're praying and hoping that something happens. That something is that inflation comes down. So I didn't mean to take up that much time with that, but it's important for you to understand, like, look, this didn't solve any problems.
Right, yeah.
We didn't solve any problems. We didn't come out and say, holy shit, yeah, it's not that the Fed could be there and the punch bowl. It's everything, all the problems that they still exist today, except, hey, you know what we're not going to do as aggressively, which I think is a negative. I think it's a negative if you're stretching out how long it's going to take for us to get to 3%, 2.75%, whatever. Why stretch it out so much? Why not just do it and get it there? Or, again, not by, they don't want to raise by 2, but just, I think you get a little bit more aggressive than what they did, but again, I don't think it solved any problems, so we'll see how the market reacts after this, right? The initial knee-jerk reaction, obviously when you see a move like that, there's tons of shorts.
Right.
And when you see the market moving like that, these algorithms like, holy shit, boom, right away, right? So we got to cover these shorts right away, and we'll, put them back in later on, but you saw a lot of short covering taking place, but it's going to be interesting to see. It's just going to be even more volatile over the weeks ahead, I think.
I like that. I like the transition here because I want to talk about what do we think the odds of the future events are happening. Not that we have a crystal ball, of course. Allow me to put on my political consulting hat. What do you want? I think what you're saying, Frank, is yes, the Fed's not controlling the market in a sense, but you want them to be in a position of strength so they can control the narrative. Mm-hmm. And that's what Powell's trying to do. He's out there with a microphone telling people. And from that
that's why it's not a big deal, like what you said, right? This is the rate hike cut, with this 50 basis point hike. First one since 2000.
Yeah.
We knew it was coming, right? So the Fed's controlling that, right? The Fed's, it's a great headline and it's awesome. Yeah, it surprised me too. I was surprised at that, but it's not a big deal, right? Because we knew it was coming. That's what the Fed's used to doing, just being able to predict and control.
And to answer your question on why they're not doing that, because I believe you, if they would have surprised the market, if Powell said, 75 basis points is on the hike, even a percent is on the hike, is on the table, excuse me. Yeah, Dow does the exact opposite. So the cynical in me, I guess, or the pessimist in me, they look at stock prices. No, we got to get, in that sense, people, you really want to think about, hey, stocks only go up, prices are good, wealth effect and all that kind of thing. They pay attention to stock prices. They care about their reputation. They care about what they're doing. And I'm not saying that's bad. I have to give him credit.
Organization.
He's at least halfway being consistent in the sense that he's admitting, hey, I'm trying to be communicative. I'm trying to explain to you guys what I'm doing. So to that point, I got to give him some credit.
And if you believe what you just said is exactly right, Daniel. So if you
stop right there. Next topic.
That's it. Let's go. And I'll see you guys tomorrow. Take care. Daniel was right. But just to the point of how the Fed looks at the market, I mean, you just look at 2019. I mean, why did the Fed start cutting rates in 2019?
Because we had a hell of a sell-off when I was at home celebrating Christmas and you were working.
Yeah, but it was because of trade wars that didn't exist, right? China, beating the drum, saying, with Trump and talking a big game, even though they can't do anything, right? We buy their goods. We could buy them from any place. It would be more expensive to buy them other places, but as long as we have the power, we're buying your goods that you produce. China will always need us forever. So they are not in the driver's seat. Our politicians made them in the driver's seat, and I know that a lot of these contracts and everything, and maybe Trump handled it the wrong way, just saying with tariffs and whatever it is. But you look at 2019, we still had strong GDP. We just had a lot of this when you see the media, trade wars, and oh my God, and there's going to be no more globalization. All the bullshit. Think about and that was one of the things that again, you get things wrong, you get things right. But I wrote a report and I felt like it was controversial and saying this is 100% smokescreen bullshit. All right, there's no trade war. It's not going to be a trade war. Buy the freaking dip here. The Fed's there, low interest rates, right? They're lowering, and look at trade wars. None of that shit, right? If you go back,
they were good buying opportunities.
If you go back to 2019, I bet there's about 50 million plus stories you can look on Google. Just Google it, and it'll come up with like 100 million freaking stories on it of everyone, the media going crazy, no more globalization, all of this bullshit. When again, you're supposed to say a lot of shit, which China did in the U.S. shit, but underneath, nothing really happened. China was just like, okay, here, whatever they give each other under the table, a special, whatever it is. But nothing really happened for that. So when I look at 2019, it's, hey, the market's crashing. Holy shit. But it was crashing for reasons that really didn't exist. It wasn't like we're seeing today where, look, inflation, right? That's a data point. Inflation, right? We didn't see like China stop trading with us, right? We just assumed that was going to happen. I mean, COVID, lockdowns. Okay, that's a data point. Holy shit, we need to do something. Like 2019 was a data point. You just looked at the market and said, okay, well, let's start cutting again. And when you did, the market came up, everybody applauded it. And then who knows what would happen if we didn't have COVID in 2020. But that's just to your point. I didn't mean to cut you off.
No, you're good.
If you look at 2019, it's a clear example of how the Fed's looking at the market and, just reacting instead of doing things where, holy shit, this is a major problem right now. We need to handle it.
Exactly. And when we're looking at the market, and since, okay, so what they've done is done. So now we got a couple of more Fed meetings in place over the couple months that are going to be bullish in general for that. Well, Frank, this new normal, what do we think? Not, like I said, not that we're predicting, but because of actions they're taking right now, where are we at? Well, we still have COVID issues. We still have supply chain issues. So looking forward, what do we want to be positioned to as this plays out? And again, it's not that we're telling you what the future holds. We're simply saying, hey, the odds are pointing to higher inflation year over year at a constant level. Because as we've talked about in the past, once you get to that year over year mark, it may not go down a lot, but it looks a heck of a lot better when you're comparing to high levels last year to high levels this year. I say all that because we want to steer you to energy and commodities, because the momentum, the policies in place that are being enacted right now, including the Federal Reserve, including oil and gas prices, sanctions, restrictions, regulations, are playing a major role. And there's some good articles, if we want to segue into that, Frank, from the Wall Street Journal today about that. But I want to kind of ask you, now that this new normal from easy money policies and low interest rates into a rising interest rate environment, commodities are definitely going higher, and we've been pounding the table on this, but I guess I want to give you another opportunity because I'm crazy bullish on that because of what I've just said, but I want to give you, what do you think the next 3 to 6 months?
I think certain commodities, right? I mean, you're looking at oil makes sense where Russia's controlling it. I think for me, my mistake is I thought I thought it would be over by now. I don't know what the consequences would be and how,
You mean the
war with Russia, but it's not, and it's up in the air, right? Which is uncertainty. And look, they control Europe, right? The two things that control the world is energy and food. And you know what? We solved the problem on energy. We really did solve the problem on energy, where we became the biggest producer in the world and we could produce, and our drillers are being restricted regardless. If you want to have the argument, federal land, they're being restricted. They can't drill as much as they want to drill. And then we could send all the oil to Europe, and all the climate change idiots, right, who think the world's going to end tomorrow, right? Right? Y'all believe, whatever. But tomorrow, you know how they are, right? They'd rather you sleep on a fucking park bench and lose your house because you're paying higher energy prices now to save something that may happen 100 years from now or 50 years from now, 30 years from now, right? So we're in it. This is national security here, right? I mean, this is we're seeing prices where at the pump, it's a fucking joke to heat your house. These costs are going up tremendously. I mean, just to put in perspective, inflation up 8.5%. You're looking at the S&P 500. That's the average gain for the S&P 500 annually since it became the 500 companies in the 50s, right? So you're taking that away with 8.5% inflation. It's almost impossible to make higher returns than that, right? So you're going to see lower returns. And when I look at this, what's going to happen in the future, right? To your question is, you're going to see commodities go. You're looking at ag prices. I talked about that earlier. Where holy shit, you should have any kind of fertilizer company, ag company in your portfolio now. It looks like oil prices are going to go higher. I just, again, when Russia's controlling that oil and about to, cut off natural gas to Europe, that's a pretty big deal. That's a pretty big deal when a lot of the, you look at, what is it, the producer price index in Germany was up like 30% or something, I think, last month. I mean, it's insane. It's insane what's going on in Europe. And I think things are bad here. It's terrible in Europe. But, that's how you want to position yourself, right? So, yes, commodities is one thing that I like, absolutely. And what are we seeing right now with Roe versus Wade, right? Whatever the leak, I don't give a shit what side you're on. I mean, this is a topic that's so highly debatable, 50-50. And, no matter how much you debate it, it's just, you look at it, whatever side you're on. A lot of this is smokescreens, right? Because is this going to happen? Who knows what's going to happen? I know that they're trying to give the authority back to the states, and some of those states are like, we're going to outlaw abortion. That's, and I get it. I understand why people are pissed off on both sides. The point is, you're going to see narratives like this where all of a sudden, notice that, I mentioned earlier, Ukraine doesn't exist. That Ukraine war, the problem, it's nowhere. The media's not talking about that. They're going crazy over Roe versus Wade right now. They're going to be going crazy. What else are they going to create? Because the midterm elections are fucking huge. These people only care about power 100%. They don't give a shit about you. They don't give a shit about me. I don't care if you're conservative, liberal, Republican, Democrat. They do not give a shit about us. We know that. We saw that during COVID. They don't give a shit. They don't give a shit about us, right? They want power. So you're going to see a lot of these crazy stories come out, which is going to... For me, one of the sectors I'd be most worried about is social media, because, the free speech thing and well, it's free speech and conservatives say all this bullshit and they're lying. And then, we're like, well, liberals are lying and back and forth and shit. But you're going to see this really, really get played out into the midterm elections. And, Snap, Meta, companies like that, I think you're going to see under pressure. because of these narratives, but expect to be very angry over the next couple of months. And you're seeing that if you watched any news fucking program over the past 24 hours. I mean, did you see Elizabeth Warren? Did you see Elizabeth Warren? No. Holy shit. She was like, if she had a gun, she would have shot like 50 people in the face. I'm not kidding. She came out. Yeah, yesterday. Okay. She came out. She's like, I'm pissed. I'm like, okay. When are you not pissed? I've never seen you not pissed in your life. You've been pissed off for the last 15 years in a row, every day. Every day. She's not married, right? She can't be married. There's no way. Is she married? There's no way.
I'm sure she is, Frank.
Is she? I mean, at least she's not home that much because she's a politician, but holy shit. If she's really, imagine being married to Elizabeth Warren. Oh my God. Holy cow, what you have to deal with when she gets home every day.
Ladies and gentlemen, it's great. Dude,
I guarantee. It's like Tom Brady, right? Tom Brady's like, I'm retiring. And he went home and he said, oh, no, I'm unretiring. You know what? Fuck that. But it's you know. But did you have to see, so watch the clip of how angry, right? And again, I mean, look, that's what's going to happen. That's what you're going to see over the next 3 months, regardless of what side you're on. So just the anger issue. How do you play that? Who's going to win? Who's going to lose? The Republicans are likely going to, take over, maybe the House and the Senate, right? It looks that way right now. Maybe they don't. Who knows what happens a couple months away. But instead of being like, holy shit, this sucks if you're a Democrat, or applauding it and cheering it if you're a Republican, what's going to happen? What's going to change, right? What's going to go on, right? And there's a lot of things within climate change issues. There's a lot of things within, social issues, ESG, just, more oil. There's lots of sectors that are going to be impacted based on what happens. And instead of looking at it emotionally, our job, Dan, which we talk about all the time, is looking at this, how do you make money off of it? Because that's your goal. The politician's goal is to get more power and control you, right? Fuck them. For you, you want to make as much money for your family as you possibly can, right? You want to support them. You want to be filthy rich. You want to be able to retire. That's how you have to look at this. You have to put your emotions aside, and that's how you have to look at it. And when you see these politicians and how emotional they get, it's pretty scary. It's pretty scary. Seriously, if you saw Elizabeth Warren, it's just like, I used to think she's always angry until I saw her. I mean, she was just like, she came out, she was walking the streets.
Redlining. Just redlining,
Watch it. Seriously, anyway, if you didn't watch it yet and you go to YouTube and you watch that, you're gonna know. I'm not like playing this up like, holy shit, exaggerating and trying to make a story, making it funny. I'm being dead serious. You have to see it. She literally had a gun on her. She would have used it. That's how crazy she was with when this whole thing got leaked. But how do you play that, right? And also we're looking at, I talked about crypto. You talked about yesterday with it blew my mind away, Daniel, that 20% fidelity, right? 20%. I'm a Bitcoin. Listen, we have a security token. I believe in crypto. I don't think people should be putting 20% in. Maybe if you're younger. If you're younger, it's different. You have working power. I get it. But 20% in Bitcoin, I mean, it's an allocation. That's what I've been arguing. And 5% allocation makes it massive, right? A 5% allocation, just like, I don't like gold right now. I think gold prices are going to come down based on what we talked about yesterday. But, Bitcoin, surged over 40,000. It's down a little bit today. The market's pulling back a little bit. But, it's amazing that crude prices, man, up to $110. And natural gas, man, over $8 to $8.50. Holy shit. I mean, that's not going to stop. I don't see that stopping. These are areas that, hey, you want to look at, and how do you benefit, how you make money off of them?
Right. And to your point, what's happening now and quickly how that'll affect. So the relief rally is great, and we're not trying to be pessimists here. We want to just say, hey, the environment, don't get crazy and go all in here, because you're going to see a lot of these rallies. I read a good article or report from somebody that we get, Frank. I can't remember which bank it was, but they were talking about how this kind of mirrors 1994, and you have this sell-off and you go sideways and rally up and down, and then maybe rally into the end of the year and come flat or whatever. Try not to get so bogged down in everything moving up or down together. What's going on right now and what will affect things? Frank, China is still having semi-lockdowns with COVID and all that kind of stuff.
A lot of companies talked about it.
Yep. And Apple talked about how they're going to take between around $8 billion in the next quarter. Now, a lot of the manufacturing and stuff that got shut down recently, some of that is back on. But just a couple of quick things. Honeywell mentioned that about half of its 20 manufacturing facilities in China aren't fully operational. Now, this is going to improve, but this is from today's Wall Street Journal. Mm-hmm. So you think several months out, J.B. Hunt Transportation, our customers are concerned about the July timeframes. Frank, Cinco de Mayo is today, right? I'm not crazy.
No.
I'm worried about July. I'm not saying the market's tanking. I'm simply saying all these relief rallies, all the market sell-offs, keep thinking ahead and know supply chains, inflation, higher prices are here to stay. So just keep that in mind when you're investing accordingly. I don't want to get crazy here and turn people into a trader, but when you have huge rallies like yesterday, depending on your allocation, like Frank just talked about, if you have winners that increase, don't be afraid to sell or trim positions into rallies and buy on dips, because within this broad market moves, you're going to have a lot of trading opportunities. We're not traders. I'm not saying that. I'm just simply saying expect more craziness like yesterday.
And it's so tough in a market environment like this, because you said Honeywell, how many plants was it?
This is 20, about half. Oh, no, I'm sorry. Half of its 20 manufacturing facilities in China aren't full. So you say there are about 10 that are running fully at capacity or operational, and there's 10 that aren't, roughly. But my point is that just that all filters through. You know, I use this silly analogy all the time about a spill in the river, and it's going to have to go down. You know, if we hear, hey, you know, stuff is hit the fan 10 miles upriver, well, if it's going to be here today, that sucks. If it's going to be here in 2 months, that's not as bad. We got some time to plan. But just be thinking about that in kind of quarterly segments or rolling couple of months, because the things that are still going on today in China lockdown, supply chain issues, and all that are going to have a huge effect the longer they last. Mm-hmm. Russia and Ukraine, you made a good point. I would have thought this would have been over by now.
Yeah.
Okay, well, every day that goes by, you got to remember, Russia and Ukraine still account for over 25% of the world's wheat and barley, 16% of corn, 24% of sunflowers, blah, 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 blah. That's only going to get worse as every day this continues to drag out, and that's going to kick the political... that's going to kick the football down the... Anyway, just don't get too caught up in single-day rallies or sell-offs, because this is going to take a long time to play out, and position yourself accordingly.
I like that. Kick the football, kick the can, kick the baseball.
Well, we're on politics.
It's going to throw everything... Yeah, I know. Use whatever analogy
where the
you
puck's
want.
going. NHL is in playoffs now.
Oh, it's the best sport in NHL.
Penguins won the other night. My dad will be happy.
I'm not. I'm a Rangers fan. But...
Oh, I didn't even think about that.
Yeah, and that goal should have counted, by the way, for the Rangers fan. But anyway, it's interesting. They lost that game in, what was it, triple overtime? But I want to bring up something here, Dan, which is crazy, because you said that about Honeywell. And when I look at Honeywell's chart here, I'll bring this up so you can see on a YouTube channel, just simple CNBC thing, just bring it up really quick. You're looking at the past 6 months, and this is Honeywell, and the stock, in January they reported, and they warned about this shit, supply chain issues. Holy cow, you're in trouble. And the stock went from 220 to 180 and, flopped around or whatever. It was like 185. And then they just reported and said, we're being impacted by this, but they reported amazing numbers, right? They found, so when this comes back online, it's going to be great for them. This is Honeywell. But then you look at GE report, you look at 3M report, right? Kind of competitors. Bombed their quarters, and their stock has fallen down. Then you saw, and I have Johnson Controls here. Again, you could say that they're definitely a competitor, right? And that stock fell 8% yesterday, but similar chart. All these guys have similar charts. If you look at GE, you look at Johnson Controls, you look at 3M, and you look at Honeywell. They all have similar charts from January, all warning, and their stock really tanking through, March and into this quarter. However, into this quarter, you're like, holy shit, all these guys have problems. But yet, they all reported, and then they all took another leg down outside of Honeywell. And Honeywell went higher. But it's so difficult to figure out, well, it's impacting Honeywell, but how come their numbers? Is it the analyst numbers, or is it too aggressive? That's the things I would look at for. Because it's not like Honeywell, they beat the expectations, right? That's what's important. So for me right now, Dan, we're looking at during earnings season is, what are the expectations of these companies? Because Honeywell was put with everyone else, and they drastically lowered their estimates, and then which is the analysts, right, the consensus estimates, and then they beat them, and it went incredibly higher. Where that's why you have to be careful of companies like Ford, companies like GM. There's other companies out there saying, "Hey, we're almost done with the supply chain issues," because that creates optimism, and what that results in is the analysts, the 30, 40, 50 year covering the stocks, they're going to keep their estimates the same, which GE said, hey, this is impacting us, but not that much. You're looking at Johnson Controls, same thing, right? 3M, it's impacting us, but we're getting a handle on it. And I think Honeywell was like, no, the shit's hit the fan, and it's going to get worse. So what do analysts do? They lowered it. So think about that from a stock perspective, because all these companies kind of declined like the same percentage over since January. But notice how the other three went down. They went down because their estimates were much, much higher than expected compared to Honeywell, which, said, hey, they beat the, so that's a way to look at how to play this. If those estimates have come down, and you could see that through free sites. That's why people subscribe to our newsletters, because we let you know that with our companies, where, you're seeing that optimism come. That's one of the things I look for, Daniel, where, expectations, sentiment is massive when it comes to these things. And I mean, when you have a stock where everything's bad, they lost the management team, everything sucks, their business models threatened or whatever, they cut costs and everything, they only need a tiny catalyst. Just one bit of positive news, because these are companies that still have 50, 60%, and you'll see that thing pop 20, 25%, right? Not that Honeywell popped that high, but when the expectations are so low, however, when those expectations are still high, and overall with the markets, Daniel, the estimates have not really come down that much. Even though we're seeing all the shit, even though there's less money in consumers' pockets because of all the shit that they're paying for and all their bills, right, which we know is going to impact spending, consumer spending, 75% of the economy, or 70%, that's going to impact earnings going forward. If you're not lowering the estimates, you're not going to beat the estimates, and you're going to wind up holding GE, Johnson Controls, thinking like, okay, things are going to get better, but the estimates are so high they missed, and next thing you know, they took another leg down, another 8 to 10% leg down, which you're like, holy shit, how did that happen? That's one of the things you need to look at in this market. Are they done? Did the right management teams tell the truth? Listen, shit's really bad right now. We're trying to work through it. We don't know if we're going to be able to work through it, right? That's really cool. What's not cool is what Ford said 12 months ago, that, hey, supply chain issues, we got like another quarter left, and we're going to be fine. And then we're going to massively produce so many of these EVs, which they still don't have a plan how they can produce these things at scale. Same with GM. They don't have a plan. They don't have the plans in place. They don't have the technology in place. But they're telling this story, and that's why you're seeing these stocks get nailed the most, because you got to be careful when you have this optimism during your calls, especially in a bear market. That's okay. You get away with it. If you're wrong in a bull market, you get hit, the stock comes back. In a market today, you can't bullshit, because the numbers are the numbers, and the numbers that are meeting, you're seeing these stocks go down 10% over the next week or two. The companies that are not, you see them go down 30, 40%. That's a big difference. So pay attention to those conference calls. That's our job. I know everyone has their own job. That's one of the things that I'm looking for. Again, when we're looking at future catalysts and things like that, let's see where the estimates are. Hopefully they come in a little bit light and makes these companies, it makes it a lot easier for these companies to beat estimates. And then you see a Honeywell, which popped nicely compared to their competitors.
Absolutely. It's going to be choppy. It's going to be rough, but management matters, prices, operations, execution matters, and it'll be a stock picker's market, and that'll be great for us. I mean, we don't want to be arrogant and say, oh, we can't wait, it's going to be tough, but this is the environment that you need to pay attention to. So hey, stay tuned to Wall Street Unplugged, so we'll help you navigate through it.
And just one last thing here before we go is you're looking at numbers. It's not every company in every sector that's getting nailed. You look at semiconductors, most of them got nailed. On Semi reported record earnings, record sales, record margins. Skyworks reported yesterday, and they lowered their estimates significantly, and the stock got hit, right? The stock's getting hit. So you got to look for who's the winners, who's the losers. Why is that? Go into the conference call. Why are they able to do that? Maybe you can look at suppliers. Believe me, it's worth your time. If you know a company's not going to have these issues, because demand is still pretty strong. If you're able to, and a lot of these names are down 20, 25% from their highs, even though they reported. But if you could figure out which companies have solved this and figured out the supply chain issues, like On Semi, I mean, that's an easy 30, 40% gain in probably 6 to 12 months compared to the companies that aren't getting it right. Because in different industries, I'm seeing companies get it right and others not get it right. And it's kind of amazing right now. Tesla's still producing massive amount of cars, generating record profit, and these guys can't even get, any of these cars off the assembly line and, any of their competitors yet. So, you have to look at those details. It's very important, because that's how you make the quick gains. And, that's a massive problem. It's not going away, especially with the lockdowns in China, right?
Yep, exactly. So we'll help you navigate through it.
All right,
Don't
guys.
panic.
No, don't panic. I love when people say don't panic when the market's crashing 30%. Don't panic. Don't panic. How the fuck am I going to pay my bills? Don't panic. Just don't panic. You're going to be fine. How do you know I'm going to be fucking fine? Right? I'm like, what? You don't know how much debt I have. I'm going to be fine. My portfolio was, $500,000, and it's $100,000 because I own SPACs, and you're telling me everything's going to be fine? Don't panic. Panic. If you panicked, you would have been out. Anyway, they say leave your emotions out of it when it comes to stocks.
That's right.
Maybe, we're all emotional with stocks. Are you kidding me? It's money. Everybody's emotional when it comes to money. So anyway, Daniel, thanks so much for joining us on this wonderful Thursday. Really appreciate it.
Absolutely. Have a good one. Cheers.
All right, guys. So that's it for us. Questions, comments for the email, frankcurzioresearch.com or Daniel at
Curzioresearch.com.
I always forget that all the time. It's so hard to remember.
I'm only going on 5 years.
All right, guys. Enjoy Cinco de Mayo, and I'll see you tomorrow. Take care.